Hey everyone, welcome back to Corporate Decoder, the place where we break down the big corporate news and financial reports so you don't have to. And if numbers and regulations are your thing, then you are in the right place. Because today we are diving deep into Corteva Incorporated's latest annual report. And let me tell you, it's a roller coaster of financials, strategies, and even some legal battles. And before we dive in, if you love getting these corporate deep dives delivered straight to you, make sure you are subscribed. Also, we have a super engaged community over on our Discord, link in the description below where you can chat with us and other viewers about all things finance. Alright, so we are looking at Corteva Incorporated's 10K filing for the year ending the 31st of December 2025. This is their big annual report giving us a full picture of their financial health, their business, and the risks they face. Corteva Incorporated, they're a major player in the agriculture world, focusing on seeds and crop protection. Think of them as helping farmers grow more food, better and more sustainably around the world. They were actually formed pretty recently, in 2019, as a spin-off from DuPont. Now, let's get to the juicy part, the financials. For the year ending the 31st of December 2025, Corteva reported net sales totaling $401 million. That is up 3% from the previous year. They're seeing an increase in both price and volume, which is a good sign. This growth is coming from better sales in their crop protection business, thanks to new products and biologicals, and also from their seed business, especially with more corn being planted in North America and Brazil. When we look at what it cost them to make these products, their cost of goods sold came in at $172 million. That's actually down from the year before, which is great news. They're achieving this by being more efficient, getting better prices on raw materials, and seeing lower commodity prices. So even though they sold more, it cost them less to produce it. That's a winning combination. They've also been dealing with some restructuring and asset-related charges totaling $146 million. This is down from the previous year, which is a positive sign that they're moving through these adjustments. These charges are mostly tied to optimizing their crop protection operations, closing down some production lines, and dealing with decommissioning costs. All this together means their income from continuing operations after taxes was $204 million. That is a significant jump from the $863 million they reported in 2024. This shows that their efforts to improve efficiency and grow sales are paying off. And then there is something called operating EBITDA, which is basically how much money they make from their core business operations before certain costs are taken out. This came in at $848 million, up from $376 million the year before. This is a strong indicator of their operational performance. Now, like many big companies, Corteva is involved in some complex financial matters. They've been active in buying back their own stock, returning about $1.5 billion to shareholders through buybacks and dividends in 2025. This indicates they're confident in their financial position and want to reward their investors. But it is not all smooth sailing. This report also highlights a significant risk for Corteva. Their plan to separate their seed and crop protection businesses into two totally separate publicly traded companies. They announced this in October 2025, and it's a huge undertaking. This separation, or proposed separation as they call it, is designed to be tax-free. But it comes with a lot of uncertainties. There is always a chance it might not happen, or that it could take longer than expected, or that the intended benefits might not materialize. This also means their executive team will be super busy with this, potentially distracting them from the day-to-day business. And speaking of separations, Corteva is still dealing with the ripple effects of its own separation from DuPont back in 2019. They've taken on and agreed to cover certain liabilities from that past deal, and if they have to pay out a lot for those, it could hurt their finances. Plus, DuPont and Dow also agreed to cover some liabilities for Corteva. But that protection might not be enough, and there is always a risk those companies might not be able to pay up if needed. Corteva is also navigating some tense legal waters. They filed a big lawsuit against a company called Inari Agriculture, claiming they illegally took and used seed technologies. This case is expected to go to trial in the second half of 2026, so it's a long-term legal battle that could have significant implications. Then there is the ongoing investigation by the Federal Trade Commission, or the FTC, and several state attorneys general. They're looking into Corteva's business practices, particularly around competition in the crop protection market. They allege unfair methods of competition and unlawful monopolies. Corteva insists they've done nothing wrong, But these investigations, even without enforcement actions, can be costly and damage their reputation. It is a critical area to watch. Now, looking at their overall financial health, Corteva seems to be in a relatively strong position. They have a solid amount of cash and cash equivalents, totaling $521 million at the end of 2025, plus marketable securities. Their total debt is manageable at $580 million. They're committed to maintaining their investment grade credit rating, which is important for borrowing money at good rates. From a shareholder perspective, Corteva has been paying quarterly dividends, and they've also been actively buying back their stock, returning a lot of money to investors. This often signals management's confidence in the company's future prospects. Looking at their long-term commitments, they have significant obligations related to pension and other post-employment benefits, totaling over $2 billion. These are long-term liabilities that they need to manage carefully, especially with changing market conditions. So, what is the overall story here? Corteva is a growing company in a critical industry, demonstrating solid financial performance through increased sales and better cost management. They're making smart moves to optimize their operations and return value to shareholders. However, they're also facing considerable risks from their ambitious separation plans, ongoing legal disputes, and the ever-present regulatory scrutiny. The success of the separation will be key to their future growth and unlocking shareholder value, but it won't be without its challenges. What do you all think about Corteva's strategy and the risks they're navigating? Do you think the separation will be a success? Let us know your thoughts in the comments below. If you found this deep dive valuable, please give this video a big thumbs up and make sure to subscribe for more breakdowns like this. And hey, don't forget to join our Discord community linked in the description for more discussions and insights. Thanks for watching, and we'll see you in the next one.